On the screen here, we today is going to talk about the turtle soups trading strategies. Okay, this is the strategy sometimes you can use in your day-to-day trading, but not too often. Okay, I will explain why in the session later. All right, and this is the content or highlights that I shall cover today. Okay, so without further ado, let's dig in. So I understand that forex tradings or CFD trading is kind of different from trading's other asset classes. Okay, because the momentum, the speed, okay, is very different. I know forex has been very vibrant. Okay, for I'm not sure any of you here is a veteran or how many of you guys here are just a new trader. For me, not I have been trading for a couple of years. Okay, not more than 10 years, but yeah, I gained some experience and I come across this turtle trading. Okay, the turtle trading is very different from what I want to talk about today. So initially, I thought maybe I should just take it away and I will just straight into these turtle soup trading strategies. But then if you guys has been trading actively since the beginning of October, all right, you can see the trend is very huge, especially on gold, especially on the dollars and other forex pairings. Okay, so maybe I will just touch briefly on the turtles trading strategies, a system, and next time, okay, on the high side, or if you encounter the similar events in the world like the US elections or maybe the pandemic that we experienced in 2020, you kind of know how to react, what to do next. Okay, and then because we have already experienced the similar trend before and we know it is huge, if you're able to capture most of the trend, if like 70-80% of the trend, yeah, you can imagine like how profitable it is. Okay, so yeah, the turtle trading strategies is actually initiated by this man called Richmond Dennis. So he is a guy from Wall Street. So this turtle trading strategy was a bet with his friend. Okay, so he bets that with the strategies that he used successfully throughout the years, he can teach anybody. Okay, no, like nobody's can just learn from his strategies, learn from his system, and can make money from the market. So he bet against his friend. His friend disbelieved him, but then turned out it has been a very successful trading system. And so this is basically an experiment. So how I mean, when are we going to adopt this kind of strategies? Is when the trend is more defined. Okay, so of course we don't know, right? We don't know whether or not it's tomorrow the trend will be very good, or we don't know next week the trend will be very good, or we'll just like sideways and then very quiet. Okay, but then we can do track. We can do like study. We can do back test, and then we can know we kind of can tell like when the market will be more vibrant than when the market will be more I would say dead. Okay, for example, tomorrow the US will have their 2 days holiday. Okay, they are going to celebrate their Thanksgiving holiday. So we can kind of anticipate that the market movement will not be as active as previously. Okay, I would say for this week itself, the PCE reading will be the last catalyst to move to push the market. So if you guys really love to trade and trade every day, perhaps you should seize the chance to trade later on. If you love to trade on the news, okay, that I think can trade in a very trendy markets. But then on Thursday and Friday, if your risk tolerance is not so high, if your risk appetite is not so high, perhaps you can just watch on the market rather than just go in every day. Okay, so for the turtle trading strategies, it's just for you to use when the market is very trendy. And of course, it's come with condition. You have to know how to do your risk management very well. And also, you cannot just go all in. Okay, you cannot just go lump sum with all your capital. You have to have at the same time do your position sizing very well. Okay, all it requires you to do is to be disciplined. Okay, you have to just to be disciplined in implement this kind of strategies. Okay, so how it works out is, first of all, identify the entry point. It's very easy. Is use the breakout strategies. Okay, I'm not sure how many of you have been like burning your hand when you try breakout strategies. For me, I think it's not really like 100% true if you apply this in the forex markets, unless you kind of know the markets is going to be quite booming. Okay, like I say, if you start to trade in October, you can tell how trendy it is in the gold markets, in the US dollar related pairing, in BTC. Okay, no one can left out BTC if you want to talk about the market lately. Okay, the BTC has been very crazy and it's very trendy. So during this kind of market, on this kind of asset classes, it is very brilliant to use the turtle trading strategy. So how it use I mean how it works. First of all, we have two kind of condition. One is I put it 30T, is depends on the time frame you use. Okay, I know some of you guys here like to do your technical analysis with just 5 minutes, 10 minutes, 15 minutes. Okay, but for me that will be too short and a lot of noise. I often not using it. But for me, most of the time in the forex markets, I tend to look at 30-minute charts and also H1 chart. But then that is only when I want to execute my trade. For me to have a really clearer picture, I often will look at day one and also H4, so that I try, because I try to not being fooled by the market. Okay, I try to avoid noises, avoid a very impulsive trade. So I will look at the bigger picture. I want to find out the trend, where which direction this no price is moving on, and then after that I will look at T1, and I will find out my support and TP levels, and before I really push the start button, push the buy or sell button to start my trade. Okay, so 20T or is the time frame that you use. So it is the breakout strategy. So if you look at these particular asset classes, and the price just break a 20T high. Okay, for example, if you look at the daily time frame, okay, 20-day high, you can tell this particular asset class is very bullish now. Okay, and then you enter it. Of course, later on, you understand, you will use other strategies that is taught by Mr. Richard to do your stop loss and TP. And if you are a very conservative person, okay, you don't like to risk a lot, you want to have a more certain trade, you can go for this 55T. Okay, so two kind of a condition that you might want to adopt. And also, I understand, I always try to relate it to the forex tradings, right? So you can have like two kind of strategies. You can implement this at the same time when you trade. You can have a short-term trading strategies, and also you can have a longer-term trading strategies. So this is kind of the long-term trading strategies that you want to use. And also, while you're holding this kind of position, at the same time, you are not stopping to execute another short-term trade. Okay, and also if you want to trade against the trade, is also possible. So I will talk about it later on. But then I just want to clear your doubts that because this is only for those people that love to trade in a long-term basis. So if you love to hold your trade longer, swing trader, or you want to hold your position for like few days to few weeks, this is kind of the strategies that you want to look into. Okay, and then move on. The second condition is your position. So you are only allowed to risk maximum 2% of your total equities. Let's say you deposit in to let's say 1,000. So your stop loss will only allow you to just lose $20, which is 2% of your total equities. Okay, so you have to tune your size very well, because before we learn how to make profit, we have to learn first how to save our capital. If let's say you are really good in trading later on, you know how to catch the goal very well. But before that, before the trend come, you already lose almost entirely of your capital, your trading capitals. Then there's no more story after that. Okay, at first you have to know how to save your trading equities before you want to hit the market hard. Okay. All right, then for the turtle trading strategy, it's just not done yet. Okay, after you enter your positions, okay, and also later on, the trend move in favor to your direction, you can always top up your position. You can always add on your position. By how many? By maybe just like 20, 30, 50% of your initial position. Okay, because at the end of the day, you still need to know how to protect the entire position. You don't want to double up. Okay, if you let's say you open 0.1, let's say, and then when the trend move in favor of your direction by like another 50 pips, and then you want to add another like 0.1, then it kind of wipe out your initial profits. Then when you want to do your decision making, it's kind of hard. You'll put yourself in a dilemma. So we don't want to see this kind of thing happens. Okay. And so if you look at the screen here, you will see this ATR. So it stands for average true range. I will talk about it later on, but then you can remember it first. Okay. And where is the exit strategies? So when you exit, when the price hits 10 days low, if you're looking at a daily time frame. Okay, if you look at the daily time frame, then when you see the price go to the opposite direction to the 10-day low, and it is where you get out from your long position, and vice versa. If you're holding a short position, if you move up to like 10-day high, and this is where you should consider to close your position. Okay, vice versa. So we have like kind of two strategies as well. We have 10T and also 20T. It depends on your risk appetite. If you really love to trade with no greater risk, then you can opt for a longer time frame. But you want to kind of protect your profits, then you can go for this 10 days exit strategy. Okay. So just now we talk about this ATR, average true range. If you guys are using TradingView, you can always go to the indicators there. All right, I'll just show you here. Right, if you go to the indicator here, you just type ATR. Find here, you can always get this reading over here. Okay, so I'll come back in a bit. Right, what is ATR? ATR basically, okay, to explain it in a simplified manner, is that it takes into account of the time, the like all-time high, all-time low of that time frame, and also the previous time frame. Okay, they average out it, so to get the volatility gauge. So because we want to for the ATR, it's just to find out how volatile the thing is, how volatile BTC is, how volatile gold is. So when the reading is low, it means that the volatility for that asset class is low. If it's high, then of course, obviously it's high, right? So how we use it is like just now. Remember, when we look at the turtle trading strategies, it come out with two trading strategies. One is you can apply 1.2 times the ATR reading or 1.5 times the ATR reading. It depends on your risk appetite, and I will just show you an example later. Yeah, but so how it used is that if you enter the trade and then you look at the ATR reading, you multiply by 1.2 or 1.5, you got the reading, and that is the amount that you're supposed to lose. Okay, I'm not to say supposed to lose, but there will be your stop loss level. Okay. Okay, so what is ATR? Right, so let's say for example, this is the USD JPY pairing. Okay, and then you look at the reading here. So at the last part, okay, if you want to enter your trade here, let's say example, if you want to catch a rebound here, Okay, so when you enter, and then the ATR here is 0.3. Okay, so it means that 0.3 multiplied by 1.2, so you get 0 about maybe 0.4. Okay, like example. So 0.4 it means that for 40 pips for the USD JPY pairing, right? So you're allowed to give like 40 pips of buffer if you want to enter a long position here, and then yeah, and then you can do your TP later on. Okay, so this is kind of the example that you can consider. And also, I think this is also, if you're not using the ATR to define your stop loss level, but at least it is, I would say, it is one of the very good indicator that you can actually tell how volatile it is. If you are a risk lover, okay, you want to catch like 100, 200, 300 pips per trade, then maybe you can enter the trade when the ATR is very high. But for me, I often try to avoid, because I'm not like a news traders. I don't trade when the market is too volatile, because that will risk my capital. Okay, I often will look at the ATR when there is less volatile. Okay, when the reading is kind of like in the middle, because of course I also wouldn't like to trade when the market is too dead. Then I'll be like wasting my time, wasting my capital, and it's not harvesting the profits in the markets, right? So for me, I will go for a neutral level. So when the ATR falls in the middle, okay, it's for me, it's just to let me know that now is kind of like a favoring market condition for me to consider to execute a trade. Okay, this is for me. I'm not sure about you. If you are a risk lover, then you can go for the highest ATR, or if you're really kind of like avoiding risk kind of person, then you can go for ATR that at the bottom of the indicator. Okay, and then where you enter your trade. So like I say, when to use the strategies. So when the market is spotted to be trendy, and when there is a very conspicuous entry or exit point. Okay, I cannot tell you like a lot of example, but I would say the markets in the pre-US election is a very trendy markets, where especially BTC. All right. Because we know like even Donald Trump and also Kamala Harris both are actually embracing the digital asset markets when they run their campaign. So definitely we can tell the next US government will kind of support this cryptocurrency markets, and that's why it leads to the BTC to the boom. Another event that you can take into account is the geopolitical tensions. So at first, I think if I'm not wrong, in early 2022, when Russia and Ukraine have war, so there was a time when the gold is moving in a very high volatility manner. And also the next one is Israel. When Israel and Gaza Strip this current Hezbollah, they have when they have war, you can also see that the oil price and also the gold price are actually moving in a very volatile manner. So when the market is very trendy, when there's a trend, this is where you can adopt this kind of trading strategies. But then, like I said earlier, we don't always get this kind of markets in the forex markets. Sometimes you can just get very volatile markets in just 1-2 hours, then later on day. Okay, like for example, later on when the US when the New York session open, we know definitely the market will be very, very volatile. But then what is how is the market going to look like 3 hours after the market open in New York, 4 hours later in New York? You can guess, right? It's kind of dead. So during the kind of markets, what kind of strategies that we can use? Because we don't always stick to just one strategies. We can change the strategies to adopt the market condition, because we cannot change the market conditions, right? We are just small potato. We are not institutional player. So, but then what we can do is change our strategies accordingly to adapt to different market condition. Okay, so when the market sentiment is good, then this is where we can apply these total trading strategies so that we can make sure that we can capture again most of the trend. Okay, not to say like 100%, that is not true. No one in the markets can tell you that they can capture the entire trend. But then 80%, 70% is very, very good for everyone. You already like standing out amongst your peers, amongst your friends, or anybody else in the markets already. Okay. Right, and then move on. So this is the main thing that I want to discuss with you guys, and maybe can give you guys some ideas, or like let you guys know what's happening in the market when in the future you spotted this kind of movement again, because this kind of movement, not to say happening every day, but it is not is kind of often as well. Okay, you can see it once in a while, and then when I hope that when this similar scenario come out again, actually can help you to react accordingly. Okay, so this is the turtle soup trading strategies. What is turtle soup? It means that it drink the soup of the turtle. It means basically it just to means that it do the opposite things than the turtle trading strategies taught us. Okay, for the turtle trading strategies, it always taught us to capture the breakout opportunities. So when the price breakout is where we enter. But then for the turtle soup trading strategy is that we do the counter trend strategies aim to exploit the false breakout. So remember what I said early on. I often didn't get successfully to trade in a breakout strategies, but most of the time I got full into a trade when I use the breakout strategies. Okay, so this is also a kind of strategies that you want to consider. Okay, especially during the time that when the trend is not so defined. Okay, you cannot just open the chart, look at the chart, and then you can tell the trend. Then maybe this is the strategies that you might want to use. And also for me, this is more useful when you want to trade in a smaller time frame. If you love to trade with like a 50-minute chart, 30-minute charts, then most of the time you can experience when the market is very choppy, when the trend is not defined. Okay, and then a lot of wick. Okay, if you know what this wick is, okay, it's the tail of the candlestick, right? Yeah, and we don't want to being fooled by using the breakout strategies. This is something that we can consider. All right, so how we do it or how we drink the soup is later on I will use this trading view to illustrate the market condition, but then maybe before that I want to tell you guys the logic behind it. Okay, so when the market is kind of sideways, okay, and after that you'll have the false breakout. I think if you trade for a while, you can kind of experience this kind of markets, right? When there's a false breakout and quickly pull back, okay, no matter whether when it reached like a day high or a day low, it reached there, break the resistance, break the supports, and then quickly pull back and then move the with opposite directions. We will often still get really get angry with this kind of price actions, right? And we know that it's being full. And often when the momentum, how to drink the soup is that we after we see this kind of price action, we see this kind of chart, and then after that we kind of look at the other indicators. For me, I always use MACD and RSI, and I know that for the if I take into account of the RSI and MACD, I can tell there's insufficient of momentum for the price to break out a new high or a new low. Then it will like give me a notification that, oh, maybe I should adopt this turtle soup trading strategies to make my next trade. So what's the logic behind it is, let me draw something to show you guys better. Okay, so before that we have like a very trendy markets, right? Then after that it become like ranging, okay, when the market become choppy, and we don't know which is the direction it used, right? So and during this time we will have like this this is the sell side liquidity, and after that we have the buy side liquidity. Okay, in the bigger picture. Okay, so in between here is us. We have this dumb money. We don't know which direction it is because we are not institution. We don't know. We don't have the money in. We don't have the sufficient money to control the markets, right? So no matter how much we buy and sell, we cannot influence the price. So this is the range for us. In between there, there's like a dumb money, right? So if you are institution players, you know where to capture the liquidity. So if you know there will be like a buy and sell, a lot of buy and sell order falls at these two range, okay, which is us, the small potato. So if you are an institutional player, you want to capture more liquidity because you want your order to be filled, and also you want most of the people to do the opposite trade with you so that we can make profits, right? Most of the time it will purposely hit any, if they want to, let's say they want to push up the market high, okay, what they do, they will try to dump the price lower first to hit all this liquidity over here. Okay, so if you are holding a long position, you might want to have a stop loss level over here, right? So when most of the people have their stop loss over here, it means that the institutional player will have enough order here, capture all your stop loss order and get all the bullets, and then after that it fly high to another direction. Okay, this is the logic behind the turtle soup trading strategies. Okay, let me show you the real life example. Okay, so this is I try to find and and with the past patterns that maybe can recall your memories. Then maybe next time if you see a very similar trend, because a trend cannot replicate 100%, but then we try to find the similarity of any trends that might help. Okay, so you see we have like a big trend, right, up and down. After that it comes here, it's kind of like a sideway. Okay, so it basically like now hovering in between this level, the up and down. Right. Remember, another very crucial condition is that we need to see something like a tail, a very long wick. It long enough, but then it didn't close down here. So we don't want to see any body, okay, any body of the candlestick to fall out of the resistance and support level. So this is where we kind of know it's like a false breakout, and maybe we want to enter trade around here when they go back up and it's got sustained at above these support levels. So maybe you want to enter a long position. And another beauty of using this strategy is we can use a very short range of a stop loss level to capture a bigger range of TP. Okay, meaning to say the win-lose ratio is very nice. Okay, the win rate is not the win rate. Yeah, the ratio will be very nice. Your return, the risk reward will be very nice. Okay, so let's say I enter a trade near here because I see after a tail and I got this UJ pair start staying at above this support level. Okay, I might want to I will consider to enter a long position here. So the lowest point of the candlestick will be my stop loss, right? And where is my TP? Maybe I can take into account of the previous sell liquidity here. So I assume that the institutional player might want to push the price up to this level. Okay, here will be my TP, and of course maybe sometime the pair might just go beyond here, but then that is fine. At least I can have some fruitful trade. Okay, yeah, it's already hit my TP and even go beyond. Okay, so this is kind of trade that we would really love to see. Okay, so if you want to know like how can we capture the trend here, then maybe will be the next topic. But today for here, I just want to tell you guys sometime during the time of the choppy markets, when the trend is not very defined, what we can do, what we kind of want to spot, and what action we kind of want to take. and the stop loss and also the TP ratio that might help you to have to amplify your risk reward. Okay. Then right, and then this is the next the other similar trend that I found that maybe I can share with you also. Okay, so let's say over here. Right, we got a very big trend. Also after that, it got captured here, and it's kind of like go sideways. Okay, keep going sideways. Okay. Yep, again, and you see a tail here. Okay, here is like a tail, and then the body is not close below this support level. Okay, and then maybe we want to consider another trade over here with a long position, right? And it's very happy that it break here, and then yeah, but this one is got a gap up. Okay, but yeah, you know, sometimes gapping is very dangerous because most of the time the gap will be filled. But for this time round, I think there's some news here over here. I can't remember what's happened that day, but then this is the gap, and the gap is not filled. At least you know, in the near sessions is not filled. So well, anyhow, we got TP here. That is very nice. So remember again, I repeat again, is we after a big trade, and then after that we get a very ranging kind of price action. After that we spot some tail. Okay, it's a similar trend. If you spot a tail up here, okay, if we got a tail up here and then close back here, then we will want to enter a short position. Okay, a short position, and we hope that the trend will just go all the way down. Okay, but you know, any strategies out there in the market doesn't guarantee you 100% winning rate. Okay, there's no such thing. So that's why it is very important for you to do your risk management very well. Okay, we definitely want to do our risk management, and we definitely want to set our stop loss. Okay, when not just anything when our trade gone haywire, then at least we can protect our capital, right? So yeah, this is the example of how we can execute or by adopting these turtle soup trading strategies. Okay. Right. Yeah, this is a very, because I understand if you go to search online, if you look at the inner circle trading strategies, okay, ICT or turtle soup trading strategies, many people will come up with many strategies by using this, you know, order block, by using the imbalance. But I would say most of the time it's going to confuse you. Okay, but of course when the strategy is more complicated, it maybe can guarantee you a more a risk reward. But for me, this is just one of the market conditions, and what I want to share with you is that maybe during this kind of market conditions, you can have a chance to use this very simplified turtle soup trading strategies, and perhaps it can give you a chance to capture some of the trend and can make profit. Okay, if you want a more detailed or more complicated ICT trading strategy, we can prepare it and we can share it in a later webinar. Okay, but then for me, this is a very easy and simplified version that sometimes I use it because, you know, sometimes when you just have enough experience and you just straight look into the chart, okay, the technical analysis, it just recall you. Okay, if you experience enough, if you encounter a similar scenario long enough, many time enough, then you have like a recall of your memories, and then you can know what to do next. So if you know, you can just use a demo account. Okay, you can register and open a demo account. You can use this kind of strategies, or even you can use your back test. You can do a back test, you can run it, and then you can find out whether or not this kind of strategies suit you, because not every strategy suit everybody, right? But before I let you go, I want to also share with you guys the recent economic events that might going to fluctuate the markets. Okay. First of all, Thursday and Friday, which is tomorrow and Friday, the market is expected to be more quiet because the US market is closed. They're celebrating the Thanksgiving Day. But then next week will be more volatile markets, because if you look at the calendar here, it will be packed with the job data from the US, and also some of the data from the UK. Okay, the highlight for next week will be on the US dollar as well as on the pound sterling, especially the US dollar, because like gold, like oil, like BTC, and a lot of pairing that are always involved in the USD. So when there is the job data, which is now is very, very crucial, because we are nearing to the next Federal Reserve interest rate decision. And we know that the Federal Reserve or the US central banks will always take into account of the job data to make the decision for their monetary policy. So any of the job data like the JOLTS, job opening, okay, like the non-farm payroll, is supposed to have a very direct impact on the dollar strength. Okay, so please take note on like when from Tuesday onward. Tuesday we have the job opening, and then Wednesday we have the ADP non-farm employment change. This will be like the preview for the non-farm payroll, and then especially, and after that, surely on Friday we will have the non-farm payroll and also the unemployment rate. So on Friday you can expect a very fluctuating markets. So yep, I hope, finger crossed, I hope you guys can make a lot of profit. And also don't forget about pound sterling. Pound sterling recently is kind of weak. Okay, so perhaps the PMI reading will shape the direction, shape the price movement for the pound sterling related pairing. Okay, so and also last reminder for you guys, later on we'll have the US PCE reading. Okay, that is the favorable inflation data by the Federal Reserve, so we can tell how important it is. Okay, and then we can know if you guys have been trading in the market recently, you know that the dollar has been quite sideways, right? So I'm not sure, because I'm no member of the Federal Reserve or the Labor Bureau member, so I cannot tell what's the PCE readings going to look like. But then perhaps there's the chance for it to fluctuate the dollar, and perhaps there's a chance for the dollar to decline further, and then you can know what action you kind of want to take. Okay, if you are not a risk lover, you are not a risk taker, maybe you just want to watch and can take action after the reading is announced, right? So right, sir. So I think here come to the end of the sessions. So before you leave, perhaps you might interested to join the Telegram group of PU Prime. This is the official PU Prime Telegram group. So you can scan the QR code here, and you guys are welcome. So yeah, I can open up for question for Q&A. All right, example from I mean a question from Abdul Rahman. Please give a live example of a trade with an indicator setup, ATR with momentum indicator. Okay, if you've been trading in market, so this might be one of the example that I maybe can share with you a bit. Okay, for the momentum indicator, right? I always remember I say I always use the RSI and MACD. So when I see this kind of pattern, I kind of know perhaps there's a chance for a trend reversal for this pairing. Okay, so I might want to try to give it a try for this pairing, and maybe I will go for the ATR. So yeah, if you can see over here, here is the ATR. So perhaps if you, let's say if you want to enter a trade here, and here is the pre stop loss level that you want to set, and if you want to take into account of the ATR, so the ATR current reading will be 40 pips. So you can add another 40 pips at your stop loss level, okay? Just to tell like how volatile the market it is now. So it is not very volatile because it is just 40 pips, okay? Yeah. So if let's say I want to enter a long position over here, I might want to have a stop loss level plus the ATR, which is another 40 pips, and I can try to enjoy the trick, the trade. I hope that I answer your question, Abdurrahman. And any other questions that you guys want to ask? For Manuel Gomez, how we know is go up or down, but it weeks. And well, this is a very long question for Manuel, but then I mean, you give me an idea. Perhaps I can prepare another webinar. I hope that it can enlighten you to kind of know what is the next direction for a pairing. Okay. To answer Mei Kwan Lee answer, yes, we can have the slide. Maybe you can request it with your very personal account manager. You can ask from them, and then yeah, I can share the slide for you. For Fortune Easy Jesus, how do you trade CPI news and NFP? Okay, just to share with you, I'm not a no risk taker. Okay, I always try to avoid risk and avoid noise, but I do understand that every time when the CPI news come out and also NFP news come out, the market will be very fluctuate, very volatile, and of course, I don't want to miss out the chance. But so what I do is I always because I always share with you guys. I just look at 30-minute chart and also H1 chart, right? So I was always wait for the next candlestick or the next two candlestick after the news was released. Only I will consider to enter. If the NFP give me a very nice direction and it was in line with my expectation, then I will consider to enter. Okay, after like a few candlestick later after the news was released. For Desmond Rusha, do you consider the wick or the body of the candlestick when drawing your support and resistance level? For me, I don't take into account of the wick, but the wick it just tell me how strong the momentum is. If you look at the candlestick have a very strong body, it means that all the orders is filled. Okay, if let's say there's like a bullish candlestick with full body, it just tell me this bullish momentum is very strong. If there's like a candlestick with a very long wick, there's and very small body, it just tell me that the current momentum is not strong and it might have a chance to have a reversal. So for me, I don't really take into account of the wick, but most of the time I'll just look at the body because it just tell me more information. Um, for Fortune Easy Jesus, this is also a very nice topic that maybe you can come to our NFP webinar on next Thursday. Okay, we will try to prepare you guys to try to trade on NFP if you want. I think CPI also have a similar effect on the dollar. So please join us on next Thursday. Maybe we can give you a more detailed answer, and also because the NFP will be released on Friday, so you can at least have a day to digest and plan out your trade for the next day. So for next week, the NFP webinar will fall on Thursday, and the exact date for the NFP to release will be on Friday. Any more question, guys? Right, if there's no more questions, very thanks for all your support. You guys are very welcome to join our Telegram group and stay tuned for our next webinar, which is on next Thursday. We're gonna talk about NFP and how we can trade with the news, trade with NFP and CPI as well, and hopefully it can prepare you guys to trade on the next Friday. Right? Thank you for coming. Thank you for supporting us. Thank you guys. Bye bye.